What's up, guys? My name is Zach. I'm an analyst in the Stock Dads Discord, and in this video, I'm going to show you guys how I made 100% profit on my patented post-earnings trade setup in LLY. Before we get started, in the description down below, I have my post-earnings checklist that you guys can check out. It has my exact strategy I'm going to show you guys here in a nice little condensed format. So the post-earnings trade setup has a couple different components. A couple of these things are pretty crucial. Some of them are not as important. Some things are very easy, which is going into number one, where the first thing you want to do when looking at your post earnings trade setups is very simple. All you want to do is go back to the daily chart and see previous earnings intraday and look at the intraday move from top to bottom. We want to pick stocks that have big post earnings ADR, which is average daily range, and ideally stocks that typically expand on the post earnings days. It truthfully doesn't matter where we gap up to, gap down to. It doesn't really matter how much we gap up or down. What matters the most is how big of an intraday move it can make. So, for example, looking at LLY here on the last earnings date, we had a high of 677 and a low of 632. So that was about a 5 to 6% intraday move already after dropping nearly 8% from a gap. If we look at the previous day, right here, we gapped down from 900 to 843. The highs are around 850. The lows are around 791. That's a $60 intraday move. And then looking at this one here, not much of a gap, but the lows are at 833s. The highs were at 886s, 887s. So we can see LLY intraday post earnings has big intraday moves. So we use that to our advantage. The next step is we want it to gap over a key level. This is usually just based off of market structure, but there's a lot of other, kind of components that get into it. But I don't want to bore you with every single little detail in this trade recap because I want to keep it short and sweet. So for me, we had a key level at 833.8. I said as long as we gap over that level without getting too extended, I'm going to look for some type of dip back above the opening print for a long. In this case, after I entered, which you'll see in a second, we actually did have some drawdown, but all that drawdown was doing was testing the daily EMAs, which ended up being okay. Looking at this trade now in LLY, my entry came after the second 5-minute candle. We had this first 5-minute candle, which flipped the trend. The second 5-minute candle was a nice inside bar after also retesting. So I entered there around 832s for the 1 day to expiration, 855 calls, targeting 859, 865 is my target. We did get some drawdown, and I said to the group, at this point, I am technically entering early, but I would rather enter early than miss it because I believe that if we get back above the opening print or get back above the 833.8 level, it could be too late. And that's exactly what happened, as you'll see in a little bit. Some of the other things that I was worried about right away is that the 15-minute chart did not technically flip to the upside yet, which it did on the third candle, and that the hourly was also not flipped to the upside yet, but it did afterwards. So as I always say, you never can control the path a stock takes. All you can do is control your entry, your exit, and your stop and your sizing, right? And so for me, this is a size that I really didn't have a stop on, right? But the one thing to understand, this is actually what I was saying, as before I was entering the trade, is that post-earnings setups are violent. You do not need large size to make a lot of money. I took a small trim originally near the highs of the day. Then after that, took about a 60% trim before closing at 100% profit. All right. So now let's walk through the beginning of the trade. The beginning of the trade, as mentioned, was in a little bit of drawdown. We had a little bit of drawdown, We came down, had a 5-minute failure to go lower, tried to break through level. We never did it. Came back down, hourly closed here, and then we immediately rallied up. And again, these lower tests here, all this did was just retest the daily EMAs. So while the trade was not working yet, I was not overly concerned because I still believe, since key thing, we got the gap over the level, that it was just a matter of time. It was a matter of it was a matter of when, not if. So in this scenario right here, as you can see, we actually did break back over level on this candle. And I was mentioning to the group, we could take a stab back above the opening print for a dated call if we weren't happy with our sizing. We wanted a full size position. Well, some people did, some people didn't. But at the end of the day, which is what I was afraid of, if we waited for the 5-minute close back above the opening print, which this candle had, it actually not only closed above the opening print, but made new highs on the day at the exact same time. So if we were to have taken the entry right there, the R to R would have been way off. We're now at this point, we're already up 25, 30, 35%. One more bar there, and we're already up 60%. At this point, I did trim a good chunk of my position because I said, hey, we're a bit extended now. It's due to pull back. And the key thing now is that we're back above the opening print. The key is, do we stay above the opening print and do we hold the first pullback? So I said, for me now at this point, regardless if it's in profit, break even, or slightly under profit, we've secured a lot of green. I'm going to wait till a 5-minute close underneath the 8 EMA to exit my position. And so you also have to keep in mind, right? Stocks don't just go straight up. This stock went from 816, call it 817, up to about 847 straight up. It's going, excuse me, it's going to pull back. It's going to have drops. It's going to retest something, whether it's an opening print, a level, an EMA, VWAP, right? So in this case, it had a pretty harsh pullback to the 5-minute 8. I wanted to see if it held. It did end up holding. And on this rally up here, we ended up getting to 100% profit where I closed all but 2 of my contracts. And then I ended up closing one more here. And then as this candle closed underneath the 5-minute 8 and 20, I ended up closing my final runner. At that point, I think I had 15 contracts down to 2, sold 1 down to the last runner just for fun to see if we hit target. And we sold. In this case, the dynamic R to R was shifting on me. We were already up 100%. I realized if we did get to the 859, it is possible we can get up to plus 200% or maybe close to a plus 180, plus 190. But in the event that we did not hold and we dropped, which we ended up dropping, I didn't want to give up all the gains on the remaining couple of runners. So I opted to take a really hefty trim. I was debating the close, ended up not closing, and then ended up closing afterwards there. And so at this point here, I closed at 8.8. The entry was $440 a piece here. Closed at $880 a piece here. It went a little bit higher to about like 920 at the peak, maybe 930, and then that was it. So ultimately, kind of stepping back for a second, reviewing, right? We want to see big intraday, right? Big intraday post earnings ADR. That's step 1. Step 2, we want to see a gap above a key level, which is what we did here over the 833.8s. And to learn exactly how to get the key levels, that's a little bit of my sauce, but maybe one day you'll learn. And then third, most importantly, is back above the opening print. The key thing for me is that taking this entry here, we were underneath the opening print. However, during this retest, we came down, spiked way lower, and actually came back above the opening print before closing the 5-minute candle underneath. So in real time, I saw this thing spike all the way down, spike all the way over the opening print, and then come back down. So we did break the opening print at one point, and because of that, I was willing to take the quote early entry. But as you can see, taking the quote early entry, despite being a little bit of drawdown, allowed us to actually maximize this trade, because at the point over here, if we were to have entered here, the contracts would have been like $570 or $580, and we would have only gotten maybe about 40 to 50% gains at the highs here. Being that these were one day to expiration, I wanted to make sure that we were locking in the gains because I knew at that point any pullback would crush us. So that's why, between that and the dynamic R, I ended up closing. And the reasoning behind the one day to expiration is because these post-earning trade setups for me are one of my highest probability trades. So I know these trades should either fail or work, usually in that day. If there's some type of weird in between, I tip my cap to the market and I move on to the next setup. An additional thing with this one is that LLY happens to be an expensive ticker. Could we have gone next week contracts off the bat? Absolutely. But it would have cost a bit more and the premiums wouldn't have moved as much. I believe some other people in the group did take the next weeks and they moved maybe 50, 60%, which still very, very great. But at the cost of being almost triple the price. I believe the next week 850s were around $1,200 a piece when we took the one day to expirations around the 855s around 4.4 each. So that's the breakdown of the trade. Hopefully you guys learned something from this. Try to be as detailed as possible, but also keep it short and sweet. As always, I trade live 3 to 4 days a week in the Stock Dads Discord. If you're not already in there, you're missing out. I'm hoping to upload more on YouTube and hoping to catch you in the next video. See ya.